You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time once again for the bi-weekly options extravaganza known as the Option Block, what the cool kids call the old OB. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-compelling, at least we think so, Options Insider Radio Network. Glad to see so many of you enjoyed our pro Q&A session earlier this week with short vol legend himself. He was doing it before it was cool. Mr. Schlesinger over there. You can check it out if you missed it after the fact. If you're a pro member, of course, over there on your exclusive podcast feed. If you want to get access to it, you know where to go. Theoptionsinsider.com/pro will explain it all to you, how it all works. You can get access to that, options, oddities on Friday, all the other cool stuff that we do. Want to listen to us live? Come on in through the Plus or the Pro. We enjoy having you folks in there, peppering us with questions, insulting the Rock Lobster, all the fun stuff that you know and love over there. If you like it after the fact, we got that for you there as well. It's still available on every platform under the sun, pretty much. So you can get it on demand on your platform of choice. So no shortage of ways for you guys to engage with the content, no matter how you like it, in your ears right away. If you like extra, you like it a little bit laid back on demand, no matter which way you like it, we got a version for you out there. So, and of course, keep those questions and comments coming too. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from on the old show today. First, let's go out to a quiet, a sleepy, a tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Mike TOSAW from St. Charles Wealth Management, a.k.a. the guy who's blowing up Twitter at Mike TOSAW. Mr. Uncle Mike, welcome back to the program, sir.
Always happy to be here on a Thursday.
Always happy to be here on a Thursday, and we are joined, despite much behind-the-scenes consternation, listeners, we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Option Pit, really, and of course, Maine, and the GIOVINAZZI Fortress-like compound. Mr. G, welcome back to the program, sir.
Pleasure to be back here, and I don't have to be on my best behavior because I know we have a guest host today, a special hostess with the mostest.
We do. You know, when you wave up the white flag, people flock. They want to fill that seat on the all-star panel. And this guest didn't get enough of his twofer yesterday, listeners, including going live for you fortunate ones who were able to listen on the Pro and the Plus feeds out there. Because we are joined once again. We have a quartet on the show today, listeners, a rare quartet on the Option Block. We are joined once again by the options guy himself, Mr. Brian Overby from Ally Invest. Mr. O, welcome back to the show. It's been a whole, 12 hours since you and I have chatted. Have you gotten your voice back yet, sir?
Yeah, I'm all excited. I wonder who Andrew's talking about.
I don't know. I guess we'll find out together as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show we break down what the heck is trading. What is lighting up our tapes out here collectively on the old screens? And once again, it's one of those days, it's kind of depends where you hang your hat, what kind of day you're having out there. The NASDAQ's deciding to go into the red, off about 0.25%. The S&P is up about 0.33%, and the Dow is up about 0.25%. So a bit of a mixed day out there. Wasn't a mixed day on the vol screen, though. We were seeing most of the major vol and products and indices coming into the start of the show, taking a bit of a break, undoubtedly due to the impending holiday weekend that is coming up here in the U.S. We had VIX Cash come into showtime right around 15.5. Puts it down about almost 2/3 of a point from where it was this time last show. VVIX was at about a 107. That's pretty much just down about half a point from where it was from last show. Good old VXX getting a little bit of the erosion back after getting a little bit firmer earlier in the week. People were getting a little bit spooked. Perhaps the warm was starting to turn out there, but so far the latter portion of the week, not so much. VXX back down to about a 29. It's down about 0.25 from Monday's show. So a whole lot of nothing really between Monday and now out there on the VXX front. We'll see if that accelerates going into the weekend. And Vol Q, a.k.a. the at-the-money vol of the NASDAQ 100, at about a 16.5. That puts it up about 0.25 of a point or so from last show. So people are still maybe waiting a little bit. And of course, NASDAQ, it's not hard to see why the vol is a little bit up, because that index seems to want to sell off today for a variety of reasons that we'll get into. But because, as the Rock Lobster mentioned, he is our mostest specialist guest today. Mr. Overby, we shall start with you, sir. What is lighting up your tape out there in the markets, and what are the folks over there in the land of Ally? What are they slinging these days, sir?
Well, in general, we actually just put our quarterly outlook out. Lindsay Bell, our top stock analyst, actually puts out a quarterly outlook every quarter, obviously. And we just sent that out, talked a lot about financials overall and what we see going on with the new audit that they just came out with, a lot of buybacks that they're looking to do. Talked about a lot of dividends overall and them increasing their dividends. The fact that they actually went through a lot of the pain. Had some really good news, and actually the stocks really didn't go anywhere. So we're heading into earnings. That's some of the things that we mentioned. That's all inside the Ally community, which is ally.com/doitright. So those are some of the things that we're kind of watching. Obviously, seeing the volatility coming down a little bit. We finally see some of the futures contracts trading down below that 20 level going out to August. So a little less anxiety in the marketplace overall, but we're still not back to where we used to be with the VIX index trading around 16. We still see the futures trading higher. So we're still seeing more volatility going into the end of this year overall.
One of the things I always like when we have brokers on the show is that there's always interesting little pockets of liquidity that pop up at all the different firms out there. You may never have expected. We talked to whatever, E-Trade, Schwab, Fidelity, and they all have interesting trades that go up on their platform that you wouldn't expect that seem to just for whatever reason aggregate there. So I'm curious for you, Brian, are there any interesting pockets of liquidity you're noticing over there at Ally where you're saying, I wasn't expecting our customers to be into this, or are they pretty much like everybody else these days, just caught up in all the meme madness? Sir?
Madness, it's there and it's still there. We had a couple of days where it was 80% of our volume overall. So just craziness as far as retail public and trading the meme stocks. Now, we've also seen a little bit of volatility in the healthcare area. Moderna obviously has been doing well recently. And then the other one that we've seen a lot of volume in is obviously the chip stocks. NVIDIA coming out and saying they're going to do a 4-for-1 split. For that always attracts retail clients overall. So we're seeing a lot of volume in some of the chip stocks, NVIDIA in particular, some of the healthcare stocks, and in that range, we're looking at Moderna.
80% on the meme front.
Yeah,
wow,
on one day.
That's impressive. I didn't think it would get that high, but that just shows you. We see that here on this show as well. Whenever we run our top 10s and our most active single names and everything, we see AMC topping the list, knocking off names like Apple and Tesla. So yeah, it's not just Ally. It's obviously everywhere. But still, just that's an impressive percentage. The folks liking themselves a little bit of memeness over there in the land of AMC. Let's now go out to the land of St. Charles, Mr. Uncle Mike, sir. What is lighting up your tape on this? I guess depends where you look. You're more of an S&P guy, so it kind of is an Uncle Mike type of day out there, sir.
Well, never before in the history of the entire stock market has there ever been a better time to sell than right now. Yes, we are at new all-time highs again today. So lots of excitement out there. And being an S&P guy, I mean, does anything else exist? I mean, I don't know. What's this NAS thing that everyone keeps telling me about through the years, or the Dow 30, or what is that?
Nobody watches those, sir. Those don't exist.
Okay, got it. So in looking at it throughout the markets, we do have new all-time highs today. We still haven't hit the all-time futures high in the S&P. We hit roughly 3 a.m. Chicago time today. So I'll be interested to see if we can make a run at that today. We've just been kind of hovering around this 4,300 mark in the S&P E-mini. We're through it right now in the SPX, and also be interesting to see if we can crack 430 in SPY. So that's kind of what I'm watching overall in the S&P. 10-year note, it's down a little bit today, so we do have a little bit of a bump in yields, which is normal in terms of the inverse relationship between stocks and bonds, or like, I guess normal is a relative term in the era with which we live. But we do have that. In terms of what's happening throughout the sectors, technology is down a little bit today, so that is kind of what's holding us back a little bit from having a more powerful update. Energy is really making a move today. XLE is up over 2% on the day. We have some movement in the financials. And I think that the main news for me with where we're watching this is the fact that we're hitting new all-time highs on days that are traditionally not very high volume, just because we have kind of a big holiday coming up this weekend. On the 4th of July, we have a 3-day weekend coming up. And it'll be interesting to see tomorrow how traders can react and how they're going to position themselves, especially the institutional money going into a 3-day weekend, if we do indeed make more all-time highs tomorrow as well. So we'll see where we're at with it. But for right now, just enjoy the new all-time highs. And as I've kind of joked on my Twitter account before, we need some tech support, if you will. So that's what we're looking for at this stage.
And if you want quality dad jokes like that, listeners, head on over to @MikeTOSAW on Twitter. He's blowing up. He's dominating Twitter over there because that kind of quality humor is what's coming at you over there, listeners. And speaking of quality humor, I need look no farther than the hinterlands of Maine. You know, he doesn't hide out there away from human civilization, not for a reason, to use a double negative. It's because his humor is so powerful. It could impact all those around him. So as a generous gift to the rest of us, he isolates himself from humanity. Mr. Rock Lobster, in the midst of your isolation, sir, what has been lighting up your tape?
Well, of course, Mike's saying the S&P 500 all-time high. Now, there was a time I can remember in the last year, we had this thing going on this last year. I can't remember what it's called. Some sort of COVID bat. Yes, it was the bat. It was the bat soup virus. And it feels like this Delta variant's going on in the news again. They're threatening the double masking again. Like all this. Anyway. I think that's going to fall on deaf ears in this country since most of the people that are at risk are vaccinated already. But it is kind of giving a little kick to like a Pfizer, Regeneron, which makes that therapy that Trump took. And some of these stocks that are sensitive to, there's going to be I almost feel like a never-ending stream of cash for these companies to provide virus stuff. Anyway, so I'm looking at it like those stocks actually look pretty good. Also, I've noticed I follow Taiwan, the situation there, and it just is a little bit of a vol bellwether, right? When you're a vol trader, you're kind of looking at these these names that could be bellwethers, right? So, like a Taiwan Semiconductor on a name that on a day when NVIDIA is up pretty good, they're not doing so good. And so like the Taiwan index is not looking so good either. So you're China talk tough on a little bit on this reuniting Taiwan and China, which, so, I would just say like those aren't, again, it hasn't become a major thing, but I would say it's flipped onto my radar as something to watch. But I think those things are actually keeping the news. And I think the last thing is I'm sure you probably if we're on vol views tomorrow, just skew index, skew. It's like, and again, like we've said before on the show, watch the vol skew index you look at, right? Because you could be picking up such a different part of the curve, measuring something different. That, because at this point, I think that upside vol is just pancaked down finally. We've had the big run. We're now at a sensitive spot, 4,300, but they have pancaked that vol on the upside, but not on the downside. So you're going to get these crazy skew readings. So, but I don't, again, from a liquidity provider point of view, if you're constantly buying upside calls, and then you're writing futures against it, it still makes you massively backspread, which you can afford to sell those puts. So I don't think the liquidity provider is probably suffering too much. However, again, that will make for some interesting, you'll read about it on Twitter and skew and all this kind of stuff. But I think, and like friends of mine that are in funds and money management, all they do is roll puts up now. They don't sell their stock; they roll puts up. They don't sell them anymore. So I think that's, and until that stops, we're going to kind of have this VIX, because I think TOSAW even knows, and Brian, like for VIX to really be 1540 right now with okay, maybe the non-farm payroll number, whatever, but I mean, it feels like it should be about 14 even or 1425, something like that, for where especially even where the short-term vol is. So I guess short-term vol is not VIX, and that's kind of where it is. So very interesting. Again, I don't think that this new variant is going to come to anything, but I could be totally wrong. But the companies that make the virus drugs and the treatments are doing very well. So if you want something to take a look at that's moving around, those are both stocks that I position in, Regeneron and Pfizer. So, and I view them going, doing well going forward.
The question we always get when you come into these long holiday weekends is, when are they going to take the weekend out? When are they going to come for the weekend? Seems like we're getting some hints, some shades of that today, even though earlier this week, Mr. Rock Lobster, was there any spookage, to use a technical term out there, on your calendar when we saw vol firming up a little bit this week, that maybe perhaps the worm was turning, or were you just waiting for the weekend to start coming out?
Yeah, I mean, there was that bit into the, I guess we had that ADP number. VXX was definitely up. The futures are up, but 40 cents. I mean, and it was from a relative low. So it definitely was a little bit, it was like, but the U.S. economy does show its resilience as long as you don't do stupid stuff to it. So clearly, since they're not locking stuff down anymore, which I would qualify as stupid stuff, we're moving on, and there's a lot of pent up demand, and people want to kind of get to work, and blah 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 blah. So I think that number was good. That did take vol down, and right now, I believe, if I'm not mistaken, we are at the low tick of VIX as a closing number today. So I would say yes. I would agree with you, Mr. Longo. And I hate to do that, because of course it makes a very unfun show for our listeners. But yes, they have definitely taken a chunk of the weekend out today.
Yeah, they tend to like doing that, so they're not scared of anything else hitting the tape. Really, tomorrow that might spook them. Speaking of hitting the tape, this is usually a part of the show. It's July 1st. We're doing the show, listeners. This is perfect time to have the numbers for June in our hot little hands from our friends over there at OCC, so we can find out if that party is continuing. Every month this year so far has been pretty much the best month in whatever months it is history. Last May was the best May ever. Pick your month. It was the best February ever. Pick your month out there. So we can see if June keeps the party going. Unfortunately, the folks at OCC appear to be a little bit late. So, of course, they will issue the numbers in a big release immediately after showtime. We need to get with their folks over there and say, hey, you know what? The show starts at noon. Get us those numbers ahead of time or else. So no OCC numbers. Maybe we'll be able to break them down. I'm sure we will on vol views a little bit tomorrow, at least on the vol futures front, which has been a surprising bright spot. For the lion's share of the pandemic, VIX futures were kind of circling the bowl. They weren't doing anything. And then all of a sudden, last couple of months, they've been kind of springing to life a little bit. So be interesting to see if that continues as well. But we'll have to wait and see for those numbers before we do that, listeners. And let's look out there. Speaking of waiting and seeing, people have been waiting and seeing to see if anything would really happen on the earnings front out there. And you know what? Maybe, maybe we got a little bit of stuff. We were joking earlier about Nike knocking the cover off the ball. If maybe that was the point. Matt was just saying earlier this week on the advisor's option that we're probably due for a season that's going to outperform eventually. It's been, 6, almost 7 in a row now where they've kind of just annihilated vol ever since the pandemic started. So we're due for something. And maybe the Nike was the beginning of the worm turning. We are heading into the new cycle, obviously. We do have some reports up there now for Bed Bath & Beyond. They popped off yesterday after the bell. They were at $28.93 going into this report. They were pricing in $4.25. In the past, they moved $4, and we thought, a little bit of extra vol. That's a dangerous thing to do. Even only 28 cents in this environment. And it seems like that may have been merited because coming into the show today, they're at $33.43. So a nice little pop here for Bed Bath & Beyond, up well over $4 here from our last show. So not a bad little run. Pretty much maybe worth that extra bit of juice, dare I say it, out there. We also had, they were actually before the bell yesterday. We also have Micron popping off. A lot going on in that neck of the woods as well. They're popping off yesterday after the bell. They were at 82, pretty much even as of this report. They were pricing in $4.51. In the past, they've moved $4.99. And coming into today's show, they're at $80 even. So they're off pretty much exactly $2. So a whole bunch of nothing out there. They pretty much got their straddle cut in half. So that's pretty much what we've expected. And that's what we've seen so far for pretty much just about every name out there on the earnings season. As we kind of limp into the tail end of earnings season, it seems like we're going to settle out around that 74% level. That's where our season is averaging out, listeners. So Nike, not enough. Nike alone, not enough to turn the worm this season. But you know what? Next season is right on the horizon. And it does seem, I've gone out on a limb and made this prognostication before and been burned. So now I'll let Matt do it and he'll let him get burned instead. But it does seem like eventually they can't keep squeezing the vol forever. Eventually, the worm has to turn. Is this the cycle? Who knows? As Matt said, July is not typically a time you expect a lot, but that's when these earnings seasons can actually surprise you a little bit because not a lot else going on. Market's a little bit thinner. So interesting stuff afoot. And let's see what other kinds of interesting stuff is afoot because it is time to unleash the Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we unleash our Eye of Sauron and fix its gaze somewhere out in the market and see what it finds. And actually, this is going to be one of our Wayback Machine shows because it seems like a fun time. We have a nice little quartet. Brian is ably joining us here on the show today. So a fun time to maybe look back and see how our exploding, ever-growing backlog of names to watch and trades to watch. We got to start paring it down, listeners. There's too many to keep track of almost these days. And now we have new ones coming from every week from the Odd Block. Oddities is adding to that mix now. So there's a lot of trades to keep an eye on. So we have to start paying it off, listeners. We're going to do that today. So Brian and Andrew, Mr. Rock Lobster, put your Wayback Machine pants on. It is time to go back. First, we're setting our dial all the way back to the heady, the halcyon days of May. Can you even remember that far back, May 17th? What a different world it was. Completely the opposite of what we're living in right now. And on that show, back on May 17th, we profiled what looks like some pretty sizable put love here in everyone's favorite name. This is HIMX Technologies, ticker symbol HIMX. This is a semiconductor name out of Taiwan. So go figure. There's been a little bit of action, a little bit of volatility in that segment of late. I won't tell you where they are right now. That's a bit of a spoiler. Instead, I will tell you where they were back on May 17th. They were at $10.57 because that's when our Eye of Sauron picked up someone really maybe a little bit spooked to the downside here. They dropped, quite a bit of money on some downside protection and very near-term downside protection, which makes it interesting as well. That's why it came on our radar. They weren't going out to December and buying a bunch of puts. No, they're going out pretty much a month. They were going out to June, and they bought a bunch of the June 9 puts. What first came across our radar was a 5,000 lot for 35 cents, lifting the offer when the stock was around 10.57. As the day went on, another 5,000 lot came in for 30 cents, lifting the offer again. Another 5,000 lot later. Total about 15,000 that we had seen. Our listeners listening live that day told us it actually was already up to 17,000 by the time we had started the show. So quite a bit of paper flocking in to these June 9 puts. Someone had to have them. Someone was spooked by some downside out there. And for a few days, it seemed like that might have been the right course of action because the stock dipped to about 10.36 a couple days later on May 21st. Unfortunately for this customer, or perhaps fortunately, we'll get to that in a second, that was the low. That was the low for the lifespan of these options. The stock pretty much rebounded immediately after that and never really looked back at that 10 handle. And by the time it got to expiration there in June, the stock was trading $14. So it had a nice run out there for the stockholders. Unfortunately, that meant these puts that this fellow or lady gobbled up and paid up to get never really had a chance. So just on about the 15,000 that we saw that day, they dropped about $500,000 on these puts. So on the options front, not so good, not so bueno. But then again, look at a couple of different ways. You could say, well, this person bought 15,000 puts. There's a good chance they own some stock. Let's just go out on a limb and say maybe, 1.5 million shares. And as of today's, right at the start of the show, the stock was trading at exactly $16. So it was up $2 beyond where the options expired. So on that front, compared to where the stock was the day they bought the puts, they're up about 8.5 million on the stock. So I think listeners, you would probably do that trade, pay $500,000 to make 8.5 million. You probably would do that all day long. So we're going to go out on a limb and assume they probably had the stock, and they're probably laughing all the way to the bank right now. Mr. Brian, I'll start with you as our able special guest here today. Is that your takeaway on this trade as well? You think that they had some stock in their back pocket and they're pretty much smiling right now? You think they were looking at some aggressive downside and they're very sad on dropping $500,000 on worthless puts?
Coin toss, obviously. And that's the biggest thing about option trading is that a lot of times people will talk about, well, option traders, they always lose, or they buying out of the money options, you lose money on them all the time. Well, if I'm buying an out of the money option on a stock that I own and the stock goes up, that's actually the best case scenario. So protected puts are bullish in general. You always like to say bullish, but nervous short term. So overall, I would like to hope that that was the situation that was going on, especially what was going on with the semiconductors just overall back on May 17th, and that chip demand was rising. Just a lot of things overall in the industry were looking fairly good. I mean, the fact that they had too much demand really couldn't be a concern overall. They had to still try to fill those orders. So I would guess that it was a protection just because of the news that was happening back on May 17th. But that would be my guess if I had to bet some money on it. That would have been my bet overall. But you never know.
Mr. Rock Lobster, black-hearted cynic that you are, sir. You're going to go out then to say this guy just threw away some money on puts. Is that what you think, sir?
I don't know. You've been around enough. Do you really think that on the savvy scale, like that's what they're doing? They're buying the 5,000. They're buying 5,000 puts on the 9 strike. I don't see that. I like a put in stock trade. And the reason why, everybody's like, Andrew, like, well, because my students, when we're talking about back spreading and looking for stocks that have a big potential move, and a lot of my students have full-time jobs and things like that. So the reason why, like, a put in stock trade is useful for people. Yes, it's expensive margin. If you have PM, it's not too bad, but the stock, you can leave orders in for the stock 24 hours a day, after hours when you have after hour trading. So, when you have puts in stock and it's a trade and you think the stock's going to move, that gives you almost 24 hours to trade. So you could scale in bids after hours, especially if you own those puts on a ratio. And then the stock flies up, you can sell the stock out even though the options aren't open. So it does give you, if you want to trade a little more, if you want to trade basically, and you want to be able to exit a position and not be totally beholden to the liquidity providers when the option market opens. You get that huge pop after earnings or something, and then you can just dump your stock, and then you just close the puts at your leisure. So it gives you a little move. So I would say yes, it most likely, like puts in stock. We used to see that all the time. Like we quoted that tons when we were floor traders, and I don't think it has changed a whole lot since then.
There you go. The black-hearted one. That is the Rock Lobster. I like it. So I'm going to go out on a limb and say this was a favorable one. We got a bit of a mixed reaction, but it seems like that is probably the takeaway here, even though you're right. I never said the option side was savvy. I come to expect pretty much whatever madness out here, throwing away all that money for just, a month's worth of protection. Weird option, pun intended. But hey, say love you. Let's see if our next one can match the weirdness or perhaps exceed it. We're going back out even farther, all the way back to May 10th. This time, listeners, to everyone's favorite name. This is EDU. This is New Oriental Education and Technology Group. They are a provider of private educational services in China. And let's see, at the time on May 10th, the stock was about $14.60. And we profiled someone coming in and really just wanting to get some upside. This was kind of like the meme trade writ large this time in EDU. It seemed like someone thought this was the next meme name ready to pop. 6,000 lot of the June 15 calls. Paper came in, gobbling those babies up through the offer. They had to trade through the offer to get this done for 65 cents. Like I said, the stock was right around $14.60 when this went up. There were no earnings in this cycle. The next earnings are on July 27th, so they haven't even happened yet. So it wasn't an earnings play. And unfortunately for this one, we always say, if you're going to buy premium, you need that move to happen pretty quickly in order for it to pay off on your trade. This guy got a move, just not the move he was paying for. This trade, never really looked good. The stock was $14.60 when he put these calls on. 3 days later, it was trading $11.50. So it had sold off over $3. So he was already pretty much annihilated before the trade ever really began. The stock continued that trajectory, dropped nearly another $4 by the time expiration came around. It was $7.59 by the time. So it had dropped exactly $7 by the time expiration rolled around, which is impressive, but not in the way that this person was hoping for. So these calls were almost instantly pretty much worthless. And by the time expiration rolled around, the stock $7 lower, pretty much cut in half. Yeah, these calls were gone. This paper dropped about $400,000 on this bad boy. Mr. Bryan, I don't see how we can really take a charitable viewpoint to this one. Looks like someone was swinging for the fences. Maybe this is one of your Ally meme kids just diving into. Was this a hot name in Ally for a while? I don't know, but someone loved some upside in EDU, Bryan, and it did not love him back.
Well, I can say that it wasn't a hot name, considering this is probably the first time I've heard this name, actually. Yeah, definitely looks like it was a speculation play overall. Obviously, education was in the news and has been in the news, and somebody was just taking a stab at it. That would be the way I would bet on that one overall.
Mr. Rock Lobster, you concur, sir, or you take the complete opposite point?
Well, I enjoy taking the complete opposite point because it makes me it makes me very happy. But it looks like I'm just looking at this, and I think as a lot of this meme volume, it just, they memed it, they gave it their best shot, and then, YOLO poofola. So I'm not seeing, isn't there another one of these stocks too? TAN. I'm trying to remember. There's one more Chinese education stock that was at $90, and it's I think $14 right now. So these stocks, which look good, are just really heading into Palookaville, and I can't figure out if they're a opportunity or not. But I'm just looking at this and saying, I think that's just a meme sob story at this point.
Yes, indeed. Let's see if we can go. Well, we're 1 for 1 so far. Let's see if we can go 2 for 1 here with our final name. Now we're dialing the Wayback Machine, even farther back, listeners, all the way. Can you remember back to the heady days of March 4th? It's lost in the mists of time. But our Eye of Sauron remembers, because on that day, we went out to Brazil for the first of many times over the course of the subsequent months. And if you've been listening to Options Oddities, all of our pro members, we've been heading out to Brazil a lot. In particular, on this name, one of my favorite tickers out there, ITUB, Itaú Unibanco Holdings SA. This is obviously an ADR out of Brazil on the Brazilian financial services side. And at the time we profiled, somebody had to have it. Somebody really had to get their hands on this bad boy, because at the time, let's see, where was the stock? The stock was a whopping $4.79. And someone came in and gobbled up nearly 20,000, 19,660 of the ITUB June 5s. So not that far out of the money, kind of a similar trade to what we just profiled there in EDU, but it looks like ITUB probably has a little bit better chance of maybe moving a bit. And they paid 44 cents. This was no slouch of a trade. It was 56 vol, so it was pretty hefty. And they actually lifted the offer. They were able to get all those done on the offer, which is impressive. They didn't have to go through the offer. ITUB every now and then can put up some paper, as we've seen of late. Like I said, the stock was $4.79. Earnings looks like they were in this cycle, actually, because their May 3rd was the expected earnings date, but that wasn't confirmed. So I'm not sure exactly when they came out. Looks like there was some earnings juice in there as well, which probably accounts for that 44 cents. But you might say, wow, 44 cents, 56 vol, that's maybe a bit of a bridge too far. I'd much rather be on the covered call side. And normally you would be correct. But on this one, it seems like whoever this fellow is or lady had excellent timing, because they bought these calls at pretty much the low they missed it by like a day during the life cycle of these options. The stock never traded lower. So these calls were looking pretty favorable almost immediately. And that's kind of what you need when you're buying premium, listeners. You need these things to pop, and you need them to pop hard on this bad boy. And that's exactly what it did. They looked good almost immediately. By early June, the stock was trading $2 higher, $6.76. So these things really gap for a $4.79. You can't really ask for much more than that. And that's pretty much what he got. The stock ended up closing at $6.35. I haven't had a chance to look to see if he closed them out during that period. But just going by right now here, how these bad boys went out. These calls went out at $1.35. So this guy did all right. This guy did all right on this trade, Mr. Rocklouse. It paid 44 cents. They went out at $1.35. So pretty much making 90 odd cents, nearly 20,000 times. Not bad money. Would you take that money, Mr. Rock Lobster?
I would. Is that our magic number money? Is it Ferrari money? Like, let me see here.
Whose Ferrari would it be, though, is the question.
It's always the girlfand's Ferrari. Don't you know that?
There you go. There you go. Offending all of our lady listeners. I have to make you do it.
In fact and lore. In lore and fact, it is. So not bad. That's a buck. They made a solid $1.35. So, I think at least $1 on that. So that's definitely, that's 1.9, 190. Yeah, I'm going to say that's actually a good one for us.
That's a sweet Ferrari and maybe a house.
Yes.
That's about 1.8 million on that bad boy. That's not bad. If you're buying a Ferrari for that, you're getting a pretty sweet Ferrari.
You're right. You get a Ferrari and a house to put it in.
You must really like your girlfriend if you're getting her a $1.8 million Ferrari.
I think that definitely would be a good girlfriend on that category. And you know what's like the Brazil again, interesting trade because they got the COVID, like all this other stuff. I think the country kind of sells off on this bad, algo driven news, and then pop, up they go, like like Phoenix rising out of the ashes. So this is a classic example of that big ITUB bank, ITUB. I think you say ITUB, Banco ITUB, I believe is how you say that.
I just like saying ITUB. It's way more fun.
It's much more fun than the Portuguese. I got you.
Mr. Brian, you mentioned a lot of the hot meme names. It seems like ITUB is getting a lot of love these days here as my screen starts screaming at me. There we go. Is ITUB, it's been lighting it up a lot of late. Has this one come across the radar of the Ally folks? And what do you think on this person who clearly had some good timing on this one, sir?
Yeah, without a doubt. And you always wonder when you see an ADR, obviously there's time changes and you just get ahead of the news sometimes overall. And maybe that's all that trade was about, was just the fact that you have a time change between here and Brazil. And it's the financial company, it's the financial sector. There's a lot of news that's out on it. I haven't necessarily seen anything going on at inside Ally invests with our clients over here on this underlying stock, but you always kind of wonder when you see these type of trades, and that the company is a foreign company and trading at an ADR on our exchange overall.
All right. It is Thursday now, listeners. It is time to unleash you legions out there. It is time for the Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's dive into it. First off, we got longtime listener here, J3 Dingle. I think he's chiming in. I think this was from not this Monday's show, but the previous one we did Sergeant Slaughter, because he said that wouldn't fly in today's world. Quote, on your feet like a man is a very non-inclusive term. You're right. I do believe that is referring to when Sergeant Slaughter was yelling at Don Johnson's character in that clip we played to try to shake Uncle Mike's memory and remind him who Sergeant Slaughter was from G.I. Joe, the cartoon. But you're right. Not the most 2021 type of term. But on the other hand, it's pro wrestling. Right? They've always been a little bit, shall we say, out there on the fringe. So maybe they get a little bit more wiggle room out there in today's Alexa. Who's going to get mad at Sergeant Slaughter after? It was a kid's cartoon. All right. Let's keep on rolling with some of your cues here. This is a good one for all of you here. This comes from AJ. He says, is it ever preferable to take off trades in pieces? For example, if you have a long straddle or iron condor and the stock moves dramatically in one direction, is it better to take off the profitable leg and leave the other leg on, or take it off as a package? Mr. Uncle Mike, perhaps we shall start with you, sir. What are your thoughts on taking off multi-leg trades when one of them moves in one direction and the other doesn't? What do you prefer to do, sir?
I do it all the time, honestly. I think that so one of my general rules is on a short option. Once I have achieved 80% of the potential profit, so let's just say I sold a call or a put for $1. Once it's at 20 cents, I get out of it. Typically, not always, but it's a vast majority of the time I do that. If I have something to where I can get out of it at that price, I typically do. If I'm trading it in a combination as like a short spread, then I'll do that same rule based on the spread itself. But in terms of when I do things in combination like that, I definitely do that. One thing that I've found myself doing a lot through the years is if oversimplified example, let's just say I sold a short call spread and the short call I can get out of, but then the long call is like at a penny or no bid, or I just can't sell it. I'll leave it on. And then you essentially have a free lottery ticket. I do that very frequently. In terms of if you're doing a multi-leg trade, I do that occasionally as well, but nonetheless, usually if it's like a no-brainer situation to where, well, I can't sell it anyway, so I might as well just sit on it and see where it goes, that is something that's very frequent.
All right, Mr. Overby, same question for you, sir. You have a multi-leg spread, multi-directional kind of spread on, and one leg starts really rocking and rolling, the other not so much. What do you do, sir?
Well, I'll address the part in there that talks about straddles, because long straddles in particular, because we've done a couple of long straddles in Options Playbook Radio overall. I agree with Andrew overall about taking off a short leg if I can get the bulk of the premium out of it. If I'm looking at long straddles, I definitely want to leg out of them. I plan to leg out of them. And we talked about long straddles in Boeing way back in the day before the pandemic, looked at a couple of long straddles in the airlines before the pandemic. And in all of those situations on Options Playbook Radio, we talked about if you have a profit on one side of that trade, or at least a decent profit overall, always think about just getting out of it, and then you have that lottery ticket on the other side. And one of my biggest things about the long straddles overall, if I'm doing those trades, is I want to do it in stocks that aren't in the news, that may get news. And that's really what my goal is with any time doing a long straddle. I don't do a lot of them, but I'm searching for industries or stocks where they might get blindsided with news overall. And that was the concept behind those trades. Now, obviously on an iron condor, I prefer to take it off as a spread. So if I'm doing an iron condor and I have the short put spread and the short call spread, I would prefer to take one side off completely when I did that trade overall. So that's usually my goal when you start getting into the more advanced four-legged type trades. But in general, I don't mind it at all. What I do mind is people trying to leg into those trades. So on the beginning, I would prefer to put it on as a strategy. I have a lot of people who will come in and when I'm talking about long call spreads and say, well, can I buy the option first and then sell the call later? And I said, yeah, you can, but you can't call yourself a spread trader. You're a long option trader then. And that's kind of the way I look at it. So I don't like legging into those. If you're going to do that strategy, don't want to leg into it at the beginning, but I really don't mind taking it off at the end.
And remember, you had some couple of home runs on straddles earlier this year, and that's a good indicator, listeners. When Brian's picking straddles in OPR, things are rocking and rolling. Wasn't it USO you did the straddle on?
Yeah, I know we did a couple on Jets, just waiting for
Jets as well. Yes.
On the pandemic, and then obviously Boeing, USO. Yeah, I think we did. Yeah, as a matter of fact, I just pulled it up. Yeah, we did do a straddle in the oil in USO and USL. Also worked out. Yep, I remember those.
See, I listen to your show every now and then, on occasion, by appointment. All right. Next up, if you're not listening, listeners, you're missing out. Check out OPR if you haven't done so already. Mr. Rock Lobster, our buddy Mr. Luigi wants to know, does the Rock Lobster use the skew index for any bearing on his market analysis? So first off, if you have anything to add on that, taking multi-leg trades off, have at it. And then B, Luigi wants to know if you you mentioned the skew index earlier today, so I'm guessing you love it. It's your favorite indicator, sir.
I'm not going to say it's my favorite indicator. I agree with Brian, though. Like, the thing with trading straddles and strangles and all that kind of stuff is, and I'm all like, a lot of times I keep a combination of short options and long options, basically. Kind of for if I'm trading like an overnight vol book, basically. So like my rule is the side that makes money you take on a long option. Like, so if that long option is making enough money, you definitely want to take it. And the TOSAW rule, like on the short options, I don't mind taking off the short option and potentially leaving that long option open in case you get like a lottery ticket. I do not like closing the long option and leaving the short option totally open, though. That's usually that ends up that can end up in tears sometimes. Like you sell a put spread and you're like, okay, I'm just going to close the long put and everything is going to be hunky dory. And then you close that long put and then the short put you have goes down to the $10. And then you're sad and grumpy and miserable. So unless you really want or have a hankering to take delivery, that's I would watch that type of trade. Index wise, I kind of have we do have some proprietary skew stuff here that I use looking at skew. So I would give you a hint, so I look at like the 25 delta option versus the at the money. We have something called a pitchfork. I didn't invent it. I actually learned it from one of my students as a good retail way, and it's basically comparing the at-the-money straddle, the 25 delta option. And you see how much juice you've got in that strike relative to the straddle. So when it's super pumped, it gives you an idea of what I would call real skew. And I separate the call skew out. I actually like call skew is separate from put skew. Like, so if you're an SPX trader, that's how you trade the skew. You've got like put skew, at the money, call skew. So you keep them separate in your head. I think that's much more effective if you want to trade it, although the skew is very sexy by the SIBO because it's a number and all that kind of stuff. But, you know, you could have really compressed calls and it kind of messes with the way the index provides a value. So just like I say, have whatever you use, understand what it is. And I would not flip from indicator to indicator once you watch something all the time. It's kind of like flipping from a volatility number on one platform to a volatility platform on another. You know, everybody kind of does it a little different. So you want to kind of keep your apples to apples. And if you have an indicator that you like and that you're used to, that, you know, use that as your basis to make trades on, right? All you do is look at all that stuff is like a theoretical value to me. And like, how far do you get away from some sort of mean number or the types of trades you can put on based on how far things get out of line. And I think that's, so anyway, that's what I do. And right now it's pretty dang juicy. All I have to say, you know, you don't have 8 vol in the weeklies and you got a 15.5 ticks. So there's got to be something in there that's making that happen.
Speaking of the Rock Lobster love, you're getting a lot of it from the listeners, including this is your buddy Joe Leska, I believe, Mr. Rock Lobster. He wanted to suggest, he says he has his own version, his own suggestion for theme music for Andrew the Rock Lobster here. This is probably going to get us kicked off YouTube, but what the heck? Let's play his suggestion here.
Death to America and butter sauce. Don't boil me. I'm still alive. A rock lobster. A rock lobster.
There you go, Mr. Rock Lobster. Your new theme music. What do you think of that? Courtesy of your buddy Joe there.
I'll have to thank Leska for that one. That was quite nice of him.
That was magical. I mean, I don't know what else to say. That's the first thing that came to mind.
You know, Brian, when you've arrived, when you have your own theme music, I'm just letting you know, man.
Theme music that violates all sorts of copyright laws here, but we'll let it slide as we keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, I lied. We're actually going to do a combo. Luigi's all fired up. He's still in the chat. He says he wants to know what you guys think about selling straddles or strangles and taking them inverted when one side takes off. So kind of a bit of the flip side of what we were just talking about. So if you have any thoughts on that, have at it, A. And then B, what are you watching for the rest of this week? We'll start with you, Uncle Mike, sir. Remember, no show on Monday. We're off on Monday, sir. So actually all the way through to next Thursday.
Oh, my goodness. Well, I'll tell you what I'm watching. I'm just watching new all-time highs that continue to happen in the S&P as we're going. So watching that, wanting to see how we react next week when we're coming off of the long holiday weekend and where we're at with that. So watching the numbers at this stage as per usual. Haven't had any crazy Bitcoin news in a while. So although I'm not really very active in trading that, I'll definitely be watching that. Watching the note as well, seeing if it'll still continue to the 1.5% magnet with which it's at. And then in terms of where you can go to learn more about me, go to stcharleswealth.com or follow me on Twitter at Mike TOSAW. Happy 4th of July. I don't care what anyone else says. America's still the greatest country in the world. America rocks.
And really quickly, any thoughts about selling straddles or strangles and taking them inverted when one side takes off?
I don't sell any straddles or strangles. It's probably been at least 10 years since I've even sold a short straddle or strangle, so I would not be the one to comment on such a thing.
I had a feeling, but I wanted to give you the opportunity. Maybe you went to the dark side since the last time I chatted with you. All right, let's go on out to Mr. Brian. Same question for you. What are you keeping an eye on into this long holiday weekend? And then B, if you have any thoughts about selling straddles or strangles and taking them inverted when one side takes off, have at it, sir.
All right, I'll start with the latter, and I would agree with Mike. I haven't sold anything naked in a long time, and it's mainly like a naked straddle or a naked strangle. It's because I don't necessarily have the time to watch it. If I'm going to be doing a trade like that, I would be all over the computer screen all day long. And so I need to put on trades that I can adjust, that I have time to do. And if it goes against me really hard, I just don't want to deal with it overall. The beautiful thing about being a retail investor is that you have that choice, that you don't have to take that side, and you can always choose to do something a little less risky overall. So that's where I'm at. So I guess in general, it would be a no. I don't want to do it, but if you do it, you got to have a plan, and you got to stick to that plan, because your best trade is going to be the one where you get out and you had a little loss as opposed to a ginormous loss overall. Okay, so with what we're looking at, one thing that I find interesting that is the Russell 2000. It led us out of the pandemic right now. We're bumping up against an all-time high. We've got an all-time high in the NASDAQ, got an all-time high in the S&P 500 index. As a matter of fact, I think it just happened again today. We set a new print. And if the IWM has been trading in a range, just kind of looking for a little bit of a breakout in there, hopefully we can see the small caps leading us higher again. That would just be great news for the market overall. Well, then I had something else, but I just kind of lost it. I don't remember exactly where I was going with it. But IWM is probably one of the more interesting indexes that I've been looking at. And if we do get a breakout, we'll probably on Options Playbook Radio talk a little bit about a trade in that index, or I should say in that ETF, IWM, the Russell 2000 ETF.
If you want more, stay tuned, listeners. We're talking about Russell 2000 a lot in about half an hour on TWIFO. That music means we've already exceeded our time. So, Brian, if folks are intrigued and they want to check out what you have cooking over there in the land of Ally, where should they go? What should they do, sir?
Well, the easiest thing to do is to actually just follow me on Twitter. I've been tweeting a lot more at Brian Overby. Very simple. My name, at Brian Overby, is my Twitter handle. And anytime we have any educational events, we always tweet those out. And you're always going to get up-to-date news as to what's coming up next. And you can also email me any questions that you have. If you listen to Options Playbook Radio, Mark and I just did a huddle up just the other day, and you'd like to be a part of that huddle up, you can email them directly to me at theoptionsguy@invest.ally.com. And thanks, guys, for letting me join today. I appreciate it.
It was fun. Glad to have you on the panel. We'll have to do it again. And last but not least, Mr. Rock Lobster, A, what are you watching for a week? Because we don't have a show for a week, at least on this program. B, any thoughts on Luigi's question about selling inverted straddles or strangles? And then C, if folks want to check out the land of the pit, where should they go? What should they do?
I don't even what is an inverted straddle or a strangle? I don't even know what
that's
that is.
That's why I didn't answer it. I don't sell inverted straddles.
So do you sell it, and then when it goes inverted?
I'm assuming he means you sell it and then it moves too far against you, so you're losing money at that point. You're beyond your kind of break even on the straddle. I guess that's what I'm assuming. I don't know.
Right. Actually, I do almost everything with flies now for the reason that Brian alluded to. Just because I have students, and I only my kind of rule is I want to be like one contract, or let's just call it one trade and out, meaning it can be a simple adjustment, at least to flatten the delta until I have time to close it and think about what's actually going on if it's starting to make a mess for me. So I don't sell a lot. I do sell naked puts in stocks that I want to own. So I do that, but and this has been a good year for it. I think maybe when VIX gets down to 12 and the S&P 500 is, trading who knows where, that'll probably be not the greatest strategy in the world, so I won't do it then. But, mostly I do everything via fly. Just from the management point of view, it makes life a lot easier.
There you go. Check them out. You know where to find them. The Land of the Pit, optionpit.com to learn more. Unfortunately, no OB on Monday, but fortunately, we all get a day off. So that's kind of nice. So remember that when you're going into the weekend. If you're blasting away going into Friday saying, oh, these vol levels, I don't know. That's because you got a long weekend ahead of you. So be judicious. Keep some of your powder dry going into that. And, of course, if you need more in your ear holes, we'll be back again in about 25 minutes now with a great guest, Dan Gramsey, lighting us up over there. So he could talk about just about every futures product under the sun. So it'll be a struggle to contain him to an hour, but we shall do so. And of course, if you're listening live, we'll be back in about 25 minutes. Maybe we'll pump some fun stuff. Maybe, because Brian just joined us, maybe we'll pump OPR in between, huh? You can check out OPR and Brian's cool new trade over there on OPR. And on behalf of Mr. Brian and the Rock Lobster, who has a cool new song, and Uncle Mike, you need to get some music for him, and indeed myself, thank all of you out there for downloading, streaming, subscribing. If you're listening after the fact, have a great holiday weekend. We'll see you back here next Thursday on this show. And of course, if you're listening live, we'll see you back in about half an hour for another episode of Twifo. And then, of course, we'll all be back together next Thursday for the next edition of the Old OB.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.